Imagine a trading day where your algorithm doesn't just crunch past prices, but also reads the latest firm-specific news as it happens and uses that to steer which stocks to own. That's the premise of ChatGPT in systematic investing, enhancing risk-adjusted returns with LLMs, a study that tests whether large language models can augment a classic cross-sectional momentum strategy. The core question: can real-time textual interpretation of news improve momentum signals enough to boost risk-adjusted performance? The authors combine daily S&P 500 returns with high-frequency stock news and prompt engineer ChatGPT to evaluate whether recent headlines support a continuation of past price trends. The model spits back a score, which then informs both stock selection and how much weight each stock carries in the portfolio. In short, the LLM acts as an interpreter that lifts traditional momentum with narrative signals. Methodologically, they keep the baseline momentum framework, but enrich it with 3 layers. 1. A conventional universe restricted to S&P 500 names for liquidity. 2. A news look-back window K that gathers articles up to the end of the prior day. And 3. A prompt-driven signal, yielding a normalized score between -1 and +1. Stocks are drawn from the top momentum decile plus the second decile, and the LLM's scores tilt the baseline weights. 2 prompts are compared, basic and advanced, with a monthly rebalancing schedule outperforming weekly in most scenarios. Key findings: the LLM-enhanced momentum portfolio outperforms the baseline in both in-sample and out-of-sample periods, even after assuming conservative transaction costs of 2 basis points per trade. In the full sample, Sharp rises from 0.57 to 0.69, Sortino from 0.54 to 0.69, annualized return climbs from 15% to 18%. In the out-of-sample period starting January 2024, Sharp jumps to 1.06 and Sortino to 1.28, with returns 30% versus 24% and lower volatility 22% versus 24%. Turnover does rise, but the gains persist net of costs. The gains are strongest when the portfolio is concentrated, around 25 names, and tilted toward larger, news-rich firms under a value-weighted baseline. Limitations are acknowledged. The out-of-sample window is short, and alpha evidence is modest in some tests. Generalizability to other markets and potential fine-tuning of the LLM are left for future work. Overall, the study suggests LLMs can be practical, scalable add-ons to factor-based investing, unlocking incremental value from real-time textual information. Thanks for listening. If you found this valuable, please like and subscribe to our channel. To advance your AI knowledge further, check out our free resources at the Prompt Index. You'll find the link in the description below. Until next time.